Hey everybody, welcome to the Head Startup. On today's video, I'm going to show you how to declare your profits and your dividends from your ETFs on your annual return every year. So I'm going to show you both the method for chargeable people and non-chargeable people, and I'll explain what the definition of both of those is as well. And a few people have been asking me how you actually calculate the profits on your ETF. So I'll show you the method that you use and that Revenue have also put in their guidance to use. And I'll go through an example, say for anybody who might have, say, bought in and then sold and bought again at different times. So I'll show you the method for that. So let's get straight to it. So first, just a small bit of housekeeping. So the method I'm going to show you today is for ETFs that are subject to exit tax in Ireland, which is 41% at the moment. This tax rate basically applies to any ETFs which are domiciled in Ireland and the EU. If you are unsure of the rate which applies to your ETF, I have a video that goes through this in a bit more detail. You might want to look at that first. So there's 3 different rates that could apply to your ETF. Basically, you could pay the exit tax rate, as I just mentioned, capital gains tax, or else it could be at your income tax rates. But the majority of them that are available to retail investors in Ireland would be at the 41% exit tax rate. It basically all depends on where the fund is domiciled and the structure of the fund. Secondly, I have another video that goes through the deemed disposal rule, which applies to ETFs also. And this applies to ETFs that are at the exit tax rate at 41% again. What this basically means is on the 8th anniversary of you purchasing your units in the ETF, you have to declare your profits on the 8th anniversary of you buying into it, whether or not you have sold any of your units at all in the ETF. So if you want to check out that video first as well, I will leave a link to both of those videos in the description section for anybody interested. So with that out of the way, first off, let's have a look at how you actually calculate the profits on any ETFs. So let's have a look at a brief example here. So Revenue tell us to use the FIFO basis when you're calculating your gains. So especially if you've had a few ins and outs, this is the method you should use. So FIFO stands for first in, first out. What that basically means is whenever you're making the disposal of any units, it's your oldest ones that you're disposing of first. So I have a small example here now. Just say, for instance, in January, I bought 5 units of an ETF at a price of 100. That cost me 500. And in February, I bought 10. And in March, I bought another 10. And in April, I bought 20. And these were all at different prices. So by the end of April, I had 45 units. And the total cost for me at that time was 5,290. Then it came to May and I needed a bit of cash, so I actually decided to sell 15 of my units. And I sold them for a price of 125 at that date. So that was my sales proceeds. I got €1,875. And then let's have a look at my profit calc over here. So my proceeds there, as you see at the top, so I've kind of color coded it to make it look a bit easier. So that's my sales proceeds there at 1,875. So my cost, so I have sold 15 units here. So based on FIFO, I would look at my oldest units here first. So if I look back at my purchases, I would take the first 15 units that I purchased. So I purchased 5 units in January and 10 units in February. So that adds up to my 15. I would take the cost of the 2 of these together. So the 500 plus the 1200, and that equals my 1700 I have in my profit calculation over here. So I can see here I made a profit of 175 on those 15 units. So I hope that makes sense, and that's how you basically calculate your profit if you have just disposed of a little part of your holding in an ETF. That's how you go about it. So briefly now, I just want to explain what the difference is between a chargeable and a non-chargeable person. So this is important because it will decide what form you actually use when you're doing your annual tax return. So a non-chargeable person is somebody who earns most of their income from a PAYE job. So all of your income is basically coming from your job, and you have non-PAYE income of not more than 5k. So that 5k is net. So say, for instance, you have 10,000 of rental income, but you also have expenses of say 6,000. That would be just only a net of 4. So that would you would still be a non-chargeable person in that case. So non-chargeable people use a Form 12 when you're doing your annual return every year. And then everybody else basically is a chargeable person. So that is anybody who has non-PAYE income of more than 5,000 in a year. And they also have another condition, so a gross income of more than 30,000. So gross income is before you take away any taxes. So that's outside of PAYE. So anybody who is a chargeable person, then you use a Form 11 to do your annual return. So now I'm going to show you on the Form 11 and the Form 12 where you put in your profits and your dividends from ETFs. So first up here, I'm going to have a look at the Form 11. So this is for self-employed people and for people who have a PAYE income but have an additional income of more than 5k. So some other little things that you should also know in relation to ETFs, any profits and losses that you make on them are basically ring fence. And what I mean by ring fence is you can't offset, say, your losses that you make on an ETF against any profits you might make on stocks, etc. So that's a bit of a disadvantage opposed to ETFs. And another one as well, say, do you know the way you get a capital gains tax exemption of 1270 for stocks? You don't get that. You don't get that exemption for ETFs that are subject to the exit tax rate. So that's only ETFs that are subject to the capital gains tax, which is ones basically based outside of the EU. So there are just a couple of things you also needed to know. This income tax return for the Form 11 for sole traders is pretty big. It's 44 pages. So this is the one you do every year. So I just have the 2019 form here, but it's pretty much the same every year. So for 2020 income, you have until the October of the following year. So for 2020, you have until October 2021 to submit your forms. So ETFs go into the foreign income section of this form. As you see on the index here, the foreign income section is on pages 16 to 19. So I'll just go down to that there now. So in your foreign income section here, you have places here for your interest and dividends and stuff like that from stocks and different pensions and all this kind of stuff. So what section you need to come down to here is, so the relevant sections here are sections 322 and 323. So 322 is for funds that basically are regulated. So ones that are similar to how Irish funds are regulated. So that would be basically any of your funds basically based in the EU. So they would be all regulated pretty much the exact same. So you'll definitely know your fund is regulated if it has UCITS in the name as well. So UCITS. So if you see that in the name of the fund you're invested in, you'll definitely be going for this section 322. So it's very easier than that. So say for section A here, so payments taxable at 41%, that is any dividends that you would have received in the year. So section B here is not relevant. That's for a specific type of fund. And then section C here is where you put in your profits that you would have made on your ETF. And then that's pretty much it. All you have to do then is put in the name and address of the fund here in section E, and then the date your material interest was acquired and the amount that you have actually invested into it. So it's pretty easy to do. So there's not much to it when you're putting in your income there. That's pretty much it. Then section 323 is for unregulated funds. And I'd say for 99% of people, this won't be relevant either. Because most of the ETFs available to retail investors in Ireland, say on the Giro, they're all based in the EU, more or less. So I'd say majority of people here won't have to worry about this section. You'll be looking at section 322. But if you are, it's pretty much the same details. You put in the address, the date it was acquired, and the amount you have put into it. And that's pretty much it. You might have to put in a bit of information about the taxation that has been already taken from it if it's from a foreign state. So if they already deducted any tax, and there might be a double taxation agreement between Ireland and this country, you'll fill that information then in 324 here. So there's not much information actually required here. So it's pretty straightforward to fill out the form. So now let's have a look at what the procedure is for non-chargeable people. So non-chargeable people use Form 12. I was looking at this during the week and I realised there was no similar section on the Form 12 as there was on the Form 11 there that dealt with specifically with funds. So I reached out to Revenue and asked them for some guidance on this, and basically they told me to put it in the foreign income section. So this is straight from the horse's mouth here. So if this is wrong, you can blame Revenue. So now I'll just show you this foreign income section on the Form 12. So here's the Form 12 income tax return. So this is a little bit lighter than the Form 11. As you can see, it's only 20 pages long, which is still pretty long though. And the foreign income section there is on page 10. So I'm going to go to page 10 now and have a look at this. So they advised me now to put it into foreign income section here. But as you can see, there is a section here for dividends, for foreign pensions, income from foreign employments. There's foreign rental income here, UK deposits, EU deposits, foreign annuities, and then it says other foreign income here. So this is the only relevant bucket that I can find where you can possibly put in your ETF gains in here. So this is where I would suggest you put it in. So you can put in your source, put in your name of your ETF, and put in the gross amount of foreign income. So that would be just put in the amount of profit that you made there, and any other amount of foreign tax deducted. So if it wasn't EU, and there probably wasn't any tax deducted at all. So that would be 0 in that case, and that's pretty much it then. So just so you know, there's actually electronic versions of these forms online. So I'm just showing you the paper version just because it's easier just to show on the screen here. So I really hope you found this some way useful, and if you have any questions, please let me know in the comments, and I'll try and address. And I would really appreciate it if you could subscribe to the channel and like the video. It would really mean a lot to me. Thanks very much.